This is the SPX market map, a look ahead at February 5th, 2026. First, a quick look in the rear view. The market closed Wednesday, February 4th at 60.8083. The index established an initial balance the first hour and traded inside until a break below and trend down to 68 to 39. The afternoon rally pattern repeated yet again. Today's rally was roughly 45 points. The index closed down about 35 points. The daily range of 97 points exceeded the 21-day average true range of 70 points. Looking ahead to what might be next, the structural roadmap for Thursday. Key levels for the upcoming session. The levels that show up on net market maker positioning include only the 1 DTE expiration for tomorrow. Some of the positions are significant, some not so much. The size of the positions influence market makers, let's call them dealers, hedging concentrations of options gamma at different strikes. The net market maker position chart confirms the structure visually. The chart doesn't show what will happen, but it shows where dealers are more inclined to act, and those hedging flows help define the road ahead. Today's close is shown in green. The 1 DTE straddle is about 65 points, so let's look at the active trading range first since it is defined by the straddle. 68.20-ish to 69.50. Dealers are long calls at 69.50 at the top of the range. Price action within the active zone will be driven by existing structure colliding with real-time 0 DTE flows. Dealers are long calls in significant size that start stacking up at 70.20 up to 70.50. This positioning forms the upper resistance zone. The upper resistance zone is not shown on the current view because zooming out to include it would change the view by making the other strikes look puny. They are not. Let's leave those strikes off the map and save the version of the chart that includes the upper resistance zone for the end of the video. What's notable is the air pocket between the top of the active trading range and upper resistance zone. The chart shows the active trading range and the range above which is a ladder of dealer short and long positions. The downside, 68.15. This is the strike below the active trading range. Dealers are long here, but not in significant size, meaning 68.15. And below won't provide much downside support in the event of a sell-off. Finally, the big picture. This view of the chart shows all strikes from 6800 to 7050. The top of this zoomed-out view shows bearish positioning for tomorrow's session. A break above 6950 could make for some interesting price action if the bulls can get price above that level. Remember, 70.25 is the strike in this view, with greater than 12,000 option contracts at this strike. Analyze the visual information in the net market maker position chart and let the structure do the heavy lifting. Watch the flow to be in the know. And thanks for watching.